QuickBooks Pro Desktop 2021. Vertical analysis, profit and loss, P&L, income statement. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. We are in our Get Great Guitars practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to take a look at a vertical analysis for our profit and loss income statement or P&L report, starting off with the standard P&L profit and loss by going to the reports dropdown. Company and financial, we're going to open up the standard profit and loss report first. We're going to change the dates up top from 01/01/21 to 12/31/21. So there's our standard profit and loss report. Now note that if we were to benchmark our profit and loss report on how we did our performance report here to another company, say a larger company also in the industry of selling guitars and doing guitar lessons and whatnot, but possibly making more money than we do, we can't really compare the numbers to them. However, we might be able to compare a ratio analysis percentage-wise to them and derive some information that could be useful for decision making in the future. Now, the format that we're going to do, we want a percentage here, but it's a little bit different than the balance sheet. We compared the balance sheet, the assets to the total assets, right? And the liabilities to total liabilities and equity. But here, really our objective is to generate revenue. This is the goal on the income statement. It's really the goal for the whole company, right? That's why we have assets on the balance sheet, because we're trying to use them to generate revenue. That's why we have expenses on the income statement, because we're consuming things in order to help us generate revenue. So what we might want to do, the most common comparison on the income statement then, is to compare everything to the income, to the net income line here. So I want to compare everything that we're doing on the income statement to the bottom line of what we're trying to do, which is generate income. So that's the most common analysis here. We're going to go to the customize reports up top to do so. And notice you have a few more options, right? We got the percentage of the rows. That's not really applicable. We used percentage of the columns last time. That could be applicable on the balance sheet, but that will take the whole column, or it'll sum up and compare to net income. What I want to do is take a percentage of the income. I want to look at everything as it relates to income. So I'm going to check this one off here and then say, okay. So there we have it. Now you can tell that this is the one we want because it says income here, and that's the 100% line. So income over income is 100%. Everything else is compared to income. So let's see how this might work if we were to compare it to, say, another company. So obviously on the income line, we have categories of income. So we might be trying to say if some other company happened to have sales items, they sell guitars, and they have service items, or they have guitar lessons, we can compare our proportion of income compared to their proportion of income in those categories. So we could then say that we have the 8250, for example, divided by the 56524, and that would give us our 14% for the guitar lessons on the sales of guitars. We can obviously do the same thing, which would be the 40094 divided by the total income 56524, and that would give us our 70.9% on the sales. So if we add up all of our sales items, that will of course add up to 100% of the sales items. But also notice on the expense side, then you might be saying, well, why don't I do that same thing on the expense? Meaning compare everything down to basically the total expense line item. And we're not really going to do that on the expense side because once again, our goal here is the revenue generation. So we're going to compare the expense side as well to the revenue to see how much we had to consume in terms of categories of expenses in order to generate the revenue. So for the cost of goods sold, which is usually a large line item if we sell inventory, we've got the 31292 divided by the 56524, which is the income line up top. And that's going to give us, if we move the decimal point 2 places over, about 55%. And notice again, cost of goods sold could be, higher than that in terms of our total, because some of the stuff we have up here isn't sales, it's guitar lessons and other kinds of income. If we sold just guitars, then you would think that the cost of goods sold would be quite high because that's the cost of us consuming inventory. That's going to be, of course, a key line item then if I was to compare to some other company. If I was to compare to like a larger company, then they would have a much larger total cost of goods sold line item, and that wouldn't help me too much. But if I look at their cost of goods sold as compared to the income they're generating, then I can that gives me some information. I could say, am I lining up at least on a comparative or relative basis for my cost of goods sold as compared to the income. And if we compare it basically to just our sales line item, I won't get into other ratios, but that's going to be the idea. Then we could do the same for all the expenses down here. So obviously payroll's a big one, which is often the case. So we've got the 11590.32 divided by the sales. Once again, we're comparing everything to sales, which is our kind of our goal, 56524, and that's going to give us, if we move the decimal 2 places over, 20.5%. So notice how you can look at this this line item on the right hand side on percentages and get an idea of just basically how relevant the expenses are to our business, as well as how relevant the income is. But even the expenses down here, how relevant they are by comparing them to the income, and then we can see the relevant line items. If we did the same for a larger company that was making like millions of dollars and whatnot, we can do the same comparative analysis, and that can give us some substantial feedback. So that's going to be the standard kind of vertical analysis that you would have. So notice you have 100% here. None of the expense lines are going to add up to basically 100%, right? Because the expense lines are being compared not to the total expenses, but rather to the total income line item. So just note that you have some other options on the income statement. If we went to the customized reports up top, if we were to customize simply the columns here, if I customize percentage of the column and say okay, then you're having your percentages are basically being compared to the net income. So this could be useful, but this is not the standard way that you would have the vertical analysis. But you can see what's kind of going on here. You're trying to say now the net income, revenue minus expenses, and you're comparing everything as relation to the net income. So for example, payroll, we got the 11590.32 divided by the net income down here of the 6132.43, and that's going to be, if I move the decimal 2 places over, 189%. Again, not the most common usage, so just be aware that if you look for vertical analysis and you choose that one, it's not the most common kind of vertical analysis. Probably not giving you as much information unless you have some specific thing that you're looking into. If we want to look at the percentage of expenses, then I can go to the percent of expense, and then we're comparing everything basically to the expense line item down here. So you can see the 100% is down here in the general expense category, not including the cost of goods sold. And that could be useful for you to kind of think about your relative expenses that are compared to themselves, as opposed to comparing them to the income line item. So I think that could be most useful if you're concentrating down here in the expenses area, although you might run another report to do that. But in any case, this would be like you're saying, okay, I've got, let's say the insurance is at the 18. Now let's go back over here. Insurance is at the 1833.33 divided by the total expenses, the 18753.98, and that's going to give you, if you move the decimal 2 places over, about 9.8% about. So again, I think that's most relevant down here. If you look at the income, they're comparing it to the expenses as well. So if I took like sales at the 40094 divided by the total expenses of the 18753.98, we get, if we move the decimal 2 places over, 213.8 about. I don't think that's as useful unless you have a specific item in mind that you're basically comparing to, but this comparison down here may be useful. Going back to the customized reports up top, so once again, I think the most common percentage that you would want is this line item. So the percentage of income, and then I'm going to say okay, go back to what I think is the most common item, and then you can see that the 100% back up here to income, everything being compared to income, expenses being compared to income, everything being compared, in other words, to the goal or objective of the business from a business type of standpoint, which is of course revenue generation. So now let's do the standard customizing of this report. I'm going to remove these items over here, and then the name of the report, we might want to adjust the name of the report to like a vertical analysis of some kind, and then negative numbers with brackets around it, and remove the pennies. So we're going to go to customize reports. We're going to go to the header and footer, And let's rename it. I'm gonna call it a vertical analysis. Hopefully I spelled that right. Let's call it income statement. If I misspelled that, I apologize. The subtitle here, now it looks good. We'll keep that there, and then remove the date, time, and report basis. We'll put our name in the footer so people know who we are, how important we are that we, made this report. And then we're going to go to the fonts and numbers, and we want to put parentheses around the brackets, and I'll make them red, and I'm going to remove the pennies. And so there we have it. I'm going to say OK. So that looks pretty good. Looks pretty good. Cleans it up. Now, we might generate this report again, or possibly not when we do our month-end reports. But obviously, if this is a standard thing you want to look at, and you want to possibly provide it to the client at the end of the month and or year, then you can put it into our memorized reports, and I would save it into, if it's a month-end report, we set up a group in a prior presentation. We set up our custom groups here, and you can put it into your month-end reports and or the year-end reports here as well, and save it. We might do that in the future, or we might not redo that one when we think about memorizing the reports for the income statement at the end of this section.